let's look at Marathon Digital Holdings. So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So we go into the blockchain's megatrend theme, Marathon Digital Holdings. 767% from the 52-week low, and we are basically at the highs. So let's go into the charts. This is the chart, long-term weekly data points. There's a lot of history here. I'm not sure whether it's all blockchain related, but we have been on a very big move. There's been time cycles in the past, but they have differed in duration, so this is not like one of those clean time cycle trades. We've seen a very, very big rally. There have been some acquisitions. Marathon has acquired some businesses to help it with its blockchain investments. They are focused on Bitcoin. Yeah, let's quickly look at their webpage. So here it is, setting the pace for the Bitcoin mining industry. So that is basically their business. So it's one of the largest, most energy efficient, and most technologically advanced Bitcoin mining companies, as well as the largest holder of Bitcoin among publicly traded companies in North America. So this is one of the ways you can get exposure to the whole Bitcoin industry. When it comes to Bitcoin and cryptocurrencies more broadly, with the advent of artificial intelligence, I've become way more bearish. I do think that there's a very high probability of AIs that are able to crack any kind of encryption. So I do think that that's a major risk on the horizon. It's not there yet, but I do think that it will become a very real thing eventually, which will be extremely bearish for that part of the crypto industry. Granted, the investments and rise of cryptos is not purely related to encryption. The blockchain technology itself is interesting, but I do think that it's a key part. Anyway, big move here in the Marathon Digital. We are extremely overbought, one of the most overbought situations we have seen. Looking at the daily data points, just absolutely obscene levels. So, of course, it's very hard to look at this chart, and now we see here the pre-market trading, which is even higher. It's very difficult to put on a bullish position with a chart like this. Simultaneously, it's not necessarily super safe to be bearish either. But from a purely technical standpoint, it's very hard not to say that this stock is definitively overbought. I would give a -9 here on overbought. This is extremely bearish. Then again, it's going higher. So the problem here is, okay, what is happening among other traders? Okay, because looking at this chart, I initially think, okay, I want to go bearish. But I don't know whether there are hedge funds that are massively short Marathon that need to cover their positions. If that happens and you get an even bigger short squeeze, then it will go higher. But I will, in the end of the video, explain a very interesting way to trade this, where you can have limited risk, but a pretty nice profit opportunity. Technically, definitively bearish. Here is the seasonality for Marathon Digital. The last 5 years in green, 7 years in blue, 10 years in red. There seems to be some bearishness into early January. December, as you can see here in the table, it usually is more bearish. This is the best December we have ever seen, 86% here. That's huge. January, it can be pretty bullish, but also pretty bearish. So it's a bit of a messy month. February, it's recently been bullish, but it has also had periods of bearishness. Um, Given the context of an abnormally bullish December, I do think that there's a higher probability that a more bearish January will play itself out. So yeah, let's go here into the notes. So seasonality, I will say -3. And now let's go into the fundamentals. Yeah, so price to book in blue, price to sales in copper, and price earnings in green. So you do see that, you know, this stock is pretty overbought. Very much so. Now let's look here at the analyst price targets. So here are the forecasts. And they also think that this stock is substantially overvalued. So I do think that we have a lot of arrows pointing in the direction here of pretty major short squeeze. And from a fundamental perspective, -7 here. Next, we will look at relative performance. So we go here, and let's do some analysis. Mara. And we will compare it against Bitcoin using Coinbase. And yeah, let's compare it against the Riot blockchain, or Riot platforms, as it's now called. So, long-term, 46% correlation with S&P 500, 92% with Bitcoin, and 85% with Riot blockchain. Daily data points, 76% with S&P 500, 49% with Bitcoin, so much less than you would, you know, expect. Riot, 89%. So the strongest correlation actually is with Riot. It's not Bitcoin. So here is Riot platforms. They've been on a bullish move, but not anything close to marathon. But yeah, here is the seasonality for Riot. We do see that there's a tendency here to the left for some bearishness into January. But that's something to be aware of. And next, let's compare Mara with Riot. Riot, like that. So yeah, Mara has massively outperformed the Riot blockchain. Very overbought here on the weeklies, on the dailies, just extreme RSI. Very extreme. Seasonality. To the left here, it's favorable to Mara. On the right here, we do see that January actually tends to be a month where Mara outperforms Riot. So there's that. So on the one hand, you do have the seasonality data that is bullish in favor of Marathon. On the other hand, the technicals are pretty bearish. I do think that I will give a -3 here on relative performance. So we end up with -5.5 in favor of the bears. We are very overbought. I mean, this is getting really ridiculous. But it goes back to, you know, what I started saying in the beginning. So this is the pre-market. It's going to go even higher. So there is a risk here of a short squeeze, because for all intents and purposes, there's reasons to be bearish on this stock. Very much so. However, we do see that it's going higher. You obviously don't want to be like massively short a stock like that, because, you know, you might be forced to close your position. So an alternative strategy is to go into the options market. So I have made this tool here. So let me just deselect like that. So the outlook here is bearish. Bearish outlook. Loss potential. Never, ever have unlimited loss potential. That is as crazy as it sounds. It's a terrible idea. Never go down that road. So limited loss potential. You have the difference between debit and credit. Credit is also called a premium option trade. So the thing is that when you have a credit trade, it means that you benefit from the natural decay of options. So in this case, what I did in my personal account is that I went for something called a bear call spread. It's bearish, limited loss potential, also limited profit potential, and you benefit from the time decay of options. So if you do that and you go to like the January expiration or a bit further out, then you will benefit from that natural decay of the option. If you look here at implied volatility for Marathon Digital, it's obscene. It's just absolutely ridiculous. This is just wild. So the key thing about this type of trade is that you might take the L. So let me just show you. If you like right click here, you could sell. Go into the vertical. So if you do it like this, then you have a credit trade. So this one would benefit from Marathon going down. And the deadline for that move to happen would be the 19th of January. The stock, it is extremely overbought. I did overbought. So I do think that is a decent probability of this trade working out. So with these specifications, you would see that max profit is $17, max loss is $33. You could also, make changes here, and as you can see here, the open interest here on the 19th strike is much higher. Then the max profit is $35, and the max loss is $65. So that's one of many possible trades that could be done, where you express a bearish thesis. The benefit, though, with this trade is that, let's say that Marathon just goes wild, that there's like a huge hedge fund out there with a big short position, and they are in a bad place. They need to desperately cover their position, and Marathon goes like 30% higher than it's currently. In that case, this trade would have a max loss. However, you would have your loss capped. That's the benefit. So the benefit here with expressing the thesis with a bearish option trade with limited loss potential, also where you can benefit from the absolutely obscene implied volatility in Mara. It's to use as an example a bear call spread. The thing is that it is fully possible for Mara to go on some ridiculous move even higher. So the risk with shorting a stock like this, or to just, let's say, buy a put, is that maybe you don't get that move quick enough, because if you just buy a put, then the natural decay of options is going against you. So you need that move to happen fast. If you are a short Mara, then the loss could be quite uncomfortable if there is a monster short squeeze on the horizon. So I do think that the limited loss trade here is best. This stock is ridiculously overvalued. There's many reasons to expect a pullback, but the issue is that we also don't know what other positions are out there on this stock. So if there is a hedge fund with a big short position, and they are very close to having to just exit that trade, whatever the price is, then they would then have to buy back the shares they shorted, which would add to the buying pressure on the stock. I do think that is a lower probability event than Mara going down. So I think that this is an interesting bearish opportunity here. Looking longer term, as I said earlier, I do think that artificial intelligence, especially in the next year, would be very negative for cryptocurrencies. I do think that encryption will be broken. That doesn't mean that those kinds of AI tools will be publicly available. But we have seen this year, 2023, that AI has gone from not being that good at writing to being better at writing than any human that's ever lived. If you were to have a timed competition between the best authors currently living, like Stephen King and J.K. Rowling, and they were to compete against GPT, a timed competition, then GPT would be able to write much quicker and more eloquently than they could, which is quite a game-changing phenomenon. The reason why GPT currently is not able to write books is not because it's not able to write it. It's simply because the compute necessary to do that is just too much. So OpenAI, I mean, they are losing money currently on the Plus plan, where GPT can write a few pages. If they were to expand the context window, where GPT could like respond by writing like a 400-page book, then it would be too costly. But internally, they definitively would have the ability to just get GPT to write, a follow-up book to Harry Potter, imitating the style of J.K. Rowling. So when it comes to writing, amazing things have happened, and I do think that when it comes to mathematics, the coming year will be huge. Math is one of those things that AI is getting much better at. You also see that programming, which also is very much tied to logic, and a lot of the progress that AI makes in programming is very transferable to its ability to understand mathematics. So yes, when AI makes some game-changing progress in math, it will be able to come up with math that we haven't seen before. Similar to how we haven't seen AIs being able to, or even humans, we haven't seen humans being able to just instantly synthesize different writing styles. If you told like Stephen King, okay, I want you to create a synthesis of Tolkien and Agatha Christie's writing style, like he wouldn't be able to really pull it off. If he were able to do it, it would take a lot of time. He would have to study. It would be a big project, but GPT is like able to do that in like seconds. And when it comes to encryption, there's no reason to think it will that AI will not be able to break it. That would of course be extraordinarily bearish for cryptocurrencies. And of course, companies that have exposure to cryptos. So I am very bearish on cryptos long term. I'm not bearish on the technology itself, but I do think that the window of opportunity has officially closed. It's a long time since Bitcoin was invented. It was supposed to be a real alternative to the financial system. It simply didn't happen. The worst thing that happened to it was hodling. So instead of actually being used in commerce, it was hodled. And that is the primary reason why it didn't succeed and spoiled the window of opportunity. Of course, AI is like the big new X factor that also would be a long-term doom, at least for the encryption case for cryptos.